Welcome back to the channel. I know it's been a little while since I've posted on here, but 2022 for small caps have been fairly slow. There's opportunities here and there. You kind of got to pick your spots, but it's definitely a different market than 2020 and 2022. So I think that's another reason why it's important to expand your playbook in terms of what you trade. You know, not all markets are going to be popping off at all times. And as many of you guys know, I've been trading options over the past year as well with Tasty Trade. So that's been fun. And if that's something you guys want to get into and you want to learn more about, you know, the options and the math behind some of the options, you can check out the Unlucky Investor's Guide to Options Trading. I'll leave the link in the description if that's something you want to check out. But today I have a live trade for you that I want to share with you, and I commentate through the whole thing. I let you know what I'm looking at, what I'm looking for when I enter, when I add, and when I exit my position, and just my overall thought process with the trade. So right before we get into that, I want to talk about how I use data, because whenever I find my entries and exits and things like that, it's all by data. And I know that's the number one question I'm going to get. But I personally like to trade by data, and I like to be a little bit more of a systematic trader rather than a discretionary trader. So I will share this with you, kind of how I was tracking data, what I kind of look for. Beforehand, I was tracking everything by hand. So this is one of my sheets that I would use. You know, I would track the date, the ticker, the open market cap, the float, the gap up percentage, the pre-market volume, the gap strength. I mean, you name it, everything. And I was tracking all of these individually by hand, like one by one. So loading up these sheets would take hours and hours and hours and hours. Doing it manually by hand, but now I pull them automatically. So for example, this sheet, I have all day one gappers that gapped up over 35% and less than 50% in all of 2021. So I'll segment them off by 2020, 2021, 2022, and then I'll segment them also by the gap percentage, and I'll track the open price, the high for the day, the low for the day, the close for the day, the pre-market volume, the market cap, gap percentage, the high of day percent, meaning how much did this stock push after the market opened, and then how far did the stock price go down after market open as well, and then the total range for the day. And then these are all the gappers for 2021. So you can see that we had about 121 gappers that fit my criteria with the filters that I put on. And I use Spikeet.com to get and pull my historical gappers. I'll leave another link in the description if that's something you also want to check out. But this saves me so much time than tracking everything one by hand. I mean, literally in my sheets, I was tracking what the open price was by hand, what the close price was by hand, what the high of day was by hand, what the pre-market volume was by hand, and what the market cap was by hand. So this is a huge time saver. I don't want to make this part of the video too long because the overall recording was about 4 hours long, and I chopped it down into about 26, 28-ish minutes. So maybe a next video I can show you how I pull some of my data and then how I break it down and show you kind of what I look for. If you do like these kind of videos, be sure to drop a like on the video so that I know you like these type of videos. And if you want, you know, data pulling videos, and we can just get kind of creative. This isn't just for small cap stocks. We can pull data on like Apple, you know, large cap stocks, SPY, but let's just get creative with it. I think we can have some fun. So without wasting any more time, let's hop right into the video. Tried to pull this chart up a little sooner, but I was making breakfast and then I had some technical difficulties trying to use this software to record the trade if it comes. So right now I'm looking at VRU. It was a past runner in the past 20-30 days. So I'm looking for a potential short opportunity. Veru released news this morning about a new price target. I guess they had good earnings, so they have a new price target of about $55, and I don't think Veru will reach $55. After this gains a little bit more momentum and starts to top out a little bit, I'm going to take a short position. Hopefully there's people chasing into this stock when it goes to higher prices, but we'll see what happens. I want to kind of short this around $15, $16. If it can get up there. If it doesn't, then I won't touch it. I won't force a trade, but if it gets there, then we may take an opportunity. I was cooking eggs and sausage while this started taking off. In the morning here, I was checking to see if it would fade off. It was holding, trying to see if it would squeeze short sellers at all. Then we saw this green candle right here, and then it finally squeezed the rest out. So you can see we have a little bit of a short squeeze right here, but hopefully we get a continuation. But if we don't, we don't. I'm chilling. It's Friday. I don't want to force a trade either. If this video is too long, I may try and cut some of it out. But in the meantime, while this chart is setting up, I'm gonna be eating a little bit. Well, my sister's calling me. Hello?
What you doing?
Trading.
Snap.
Sis, I'm filming, sis, though, so I gotta...
Alright.
I bet.
Talk to you.
Alright, bye, Sluggy. Yeah, I was gonna say, maybe we get a pullback right here, and then this move right here could reel in more short sellers and then squeeze them out to push the stock higher, and then more long traders hop on, and then hopefully we can get to some higher prices. Because one of the biggest things is I don't like to short anything that doesn't have a decent amount of range. And I mean, right now the stock's not even up over 50%, I don't believe. So look at that candle. Candles like this red one right here, short sellers love to get in afterwards. You know, a lot of them are going to be risking their stop losses above this level. So there's probably some liquidity up here to be swiped through. This is pretty strong right now. And again, I don't doubt there's a lot of retail traders riding that news with that new price target. But again, let's say VERU, let's say Veru does eventually in the future reach $55. Veru's not reaching $55 today. Okay, I'm not saying it's impossible. We've seen stocks run from $1 to 50, 80, 100 in one day, but it's not very likely for Veru to actually run to $55. If it does get there, it's going to have to take a solid break. It's going to take weeks, maybe, if it even gets there. But I'm going to go grab some orange juice real quick. One thing that I did have to overcome in my trading career, I guess you could say, is being okay with not placing a trade, but especially when you reserve shares, because sometimes when you pay to locate shares, sometimes it makes you want to, put the trade on because you don't want that money that you paid for those shares to go to waste. So sometimes if the opportunity that you're looking for doesn't come, it's likely for traders to still force an opportunity. And I'm speaking from experience. But now I'll reserve shares if I see a potential opportunity. Sometimes it never does what I need it to do, and I'll just sit there and, let those locate fees go to waste because it's better than taking a red trade. Let's see if we get another sweep through these highs, because this is another fake breakout, but that fake breakout is holding, which is a pretty bullish sign. But let's see if it swipes back through these highs again, or if we'll swipe back through these lows. Either way, there's liquidity sitting above here and liquidity sitting below here, right? If you're a long trader, most long traders right now are setting their stop loss. I bet most long traders are setting their stop losses around this area and then around this area. And then most short sellers are probably setting their stop losses around this area right here. And what happens when short sellers has to exit their positions? They have to buy back their shares, which can create a buying pressure, which we know as short squeezes. So right now, in the meantime, while certain things are setting up, I'll just be getting back to emails, things like that, planning work, whatever it is. Because sometimes it could be a waste of time to just sit and watch the chart all day. So it's nice to just have the screens up and then be getting work done at the same time. Especially with small caps, I don't put on a trade every day, not even every week, only when there's a solid opportunity setting up. And the frequency of the trades just depends on how the market is. It depends on the cycle we're in and things like that. So we just gotta, trade and take what the market gives us. We can't force or create opportunities for ourselves. We just have to be prepared if and when the opportunity does come. So I'm just gonna let this chart run. I may even speed up the pace of this video while I get my work done if this ends up setting up. But in the meantime, just gonna be getting more work done right here. So I'll be talking a little bit more when and if VRU makes more moves. So it looks like right here, price may come and sweep the highs again. Maybe we get a different reaction from short sellers, or we get another pull. Let's see what happens. Having a little bit of a move right here. I already located shares this morning, but I'm going to see if they have gone up. No, actually the shares for VERU haven't even risen. We're almost in the $15 area now. 1480s, 1490s. Gonna get ready to execute if we keep pushing. I'll let you guys know when I take my first position. Okay, short sellers have definitely been getting squeezed all morning, especially when short sellers try to find the top too soon. They can definitely get shaken out, and some short sellers don't even get shaken out. Some short sellers just hold until max pain and they have no choice but to cut their loss. But let's see what happens here. I'm still going to be a little patient right here, see if we get a little bit of a pop. See if we get another pop over the highs and see how this ticker reacts. I want to see how it reacts at that 15 level. Oh, a lot of sellers at the 15 level. A lot of sellers, but let's see if they stay there. Just because there's a lot of sellers at the 15 level doesn't mean it'll turn around. That could even mean we could have a break. Let's see what happens here. Okay, I'm short a little bit here at, where did I get filled at? I'm short right now on VERU. Let me see. This is not my full position whatsoever. This is just partial because we're kind of still technically on the front side of the stock. So I'm going to be patient. But I got my first entry in. If we start to break down right here and start to lose more momentum, I will start to add to my position, but not right now because I can't risk my entry price yet unless we get a super hard drop. I would like for the market cap of this stock to be a little lower too. It's kind of high now because it's been running over the past, 30 days. And before it had its first run, I think the market cap was around 300 million. I think it was even a little smaller too, actually. But now it's sitting around 700 million at the start of this morning. And the thing about lower caps and larger caps is when it's a smaller cap, they drop a lot harder and faster. If this ends up being the top, I nearly top ticked this one, fortunately, but I'm not going to speak too soon because we're still on the front side of the stock. We have not broken its momentum whatsoever. And some people might be, and let's say VERU did end up fading off. Some people would be like, man, well, you could have just dumped your entire position size on your first entry, but it's like, but what if it goes against me? What if the stock keeps running against me and it doesn't start getting rejected? What am I going to do? So that's why you got to be really disciplined with your position sizing and not just try to make as much money as possible because it's really not about that. I think the money has to be in the back of your head. That's got to be a byproduct. We just got to focus on what's happening in front of us and execute our plan. And you can see that trading is mostly 90% preparation, 10% execution. You know what I mean? I'm sitting here for 90-something% of the time, and I'm executing maybe 2% of the time. And, I have my plan, and I was prepared before the market even opened. You know what I'm saying? Before, today opened. I didn't know VERU was going to be on the scanners this morning, but I know what I'm looking for when an opportunity does present itself. So, and if this stock goes against me, I can show you how to manage your risk, and I can show you how I'm going to get out. So it's a win-win learning opportunity. Either the stock is going to go my way and I'll exit, or it's not going to go my way and I'll take the proper exit. A lot of times people think, it's a breakout. It's longs buying. Yeah, longs might ride the momentum, but a lot of the times it's a short sellers getting stuck and creating these aggressive moves to the upside. I like this little bounce right here. I may add just a little bit right here. But yeah. At a super small position right here. I just got in. Did I get filled? I got filled at 14.66 on this ad. Show you the entries and exits after the video. I would show you what I'm executing on, but it shows my account number, and I don't know how you can hide your account number. I know we're on the 1 minute chart as well, but another thing I like to look at is a 2 minute chart a lot of the times. I would say 70 to 80% of the time, I personally like to use a 2 minute chart for intraday. I used to use the 1 minute a lot, but I started to get really fond of the 2 minute. I'm okay with taking a red trade. I've accepted the risk. If it goes against me, I'm not going to be emotional. It's not going to affect my next trades. It's none of that stuff. I've accepted the risk, so it's not going to affect my day if it goes against me. If I lose some money, if I get a red trade, it's not going to affect my day because I don't care about this individual trade. You know what I mean? It would be nice, of course, if it goes your way, but you don't know exactly what particular trade is going to go your way. I would just take these high probability setups every time I see them and manage my risk. And hopefully that the edge plays out in a span of, 10, 20, 30 trades, not just one, Looks like we might be consolidating for a little bit. So I'm not risking this high, right? Because a lot of the times these highs will get swept. So I will exit my position when I know my idea is invalidated. Just because price may come over here and real quick and spike and swipe this area does not mean the idea itself that you're looking at is invalidated. Trading is more like an if than then. It's like, if this happens, then I'm gonna do this. But if this happens, then I'm gonna do this. We've only made one barely lower low right here, so I'm just not in a rush to add so much to my position. I'm just not in a rush. There's just no point. All I'm thinking about is my risk. What is my risk on this trade? I'm not trying to add all soon because, again, I could honestly care less about how much I can make on a trade I just really want to know what my risk is on the trade, and I want to control that to the best of my abilities. And I think when you start thinking about money and things like that, it starts to tap into your emotions, and those emotions become a little impulsive, and your judgment can get clouded and things like that. So that's why I think it's a great thing to not put money at the forefront of your mind, because it will affect your decision making. Even when you think you're being rational sometimes, I mean, emotions are a weird thing. You can think you're being rational, but when you're in an irrational state of mind, you just can't think rational. One thing I do want to do, I want to start writing more. Like, I want to start writing about trading. I want to start writing, about data, my thoughts, experiences. I'm not the best writer though. It's funny, on my ACT, when I took it in high school, the writing portion I thought was the easiest part, and I thought I was going to score the highest, and I actually scored the lowest in writing after I got my results back. And I scored the highest in reading. You would think writing and reading would go hand in hand, but I guess not. I scored the highest in reading and the lowest in writing. My second highest, which was barely off of my reading score, was my science score. And in the science, there was a lot of data analysis actually, and charts, and concluding what the data is telling you. I did pretty well in that. And that's funny because I never was really that fond of, science, but the data portion was pretty cool. A little side story while we wait for this to set up a little longer. We're getting kind of consolidation. Dipping a little bit. Let's see how $14 reacts. We dipped below 14 right here with these wicks, and then we came back above. So such a waiting game, It's such a waiting game. That's why you really just got to be doing work at the same time, because you can really waste time. I want to say waste time. Putting in screen time is a really good thing in my opinion, but if you have work to get done too, you can always get work done at the same time. See, we dip below the 14 level again, and we pop right back above. So it'll be a good sign when we get below 14 and stay below 14. So many big name stocks are down. I mean, Netflix down over 50%, Facebook down over 50%. The whole Luna situation, that thing's down like almost 100%, like 99. It's not funny, but it's more of a reaction to that's crazy that can happen. If we dip and come lower, I'll add on the next bounce. Why will I add on the next bounce? Because I'm going to size in more now, but I'm going to pull my risk down. So I'm going to be risking the same exact amount that I'm risking anyways, which is 1R. R just stands for your risk units. So you might risk 1R to make 3Rs. You might risk 1R to make 2Rs. Personally, I like to risk 1R to make at least 2Rs minimum, and then I'll shoot for 3 or more. But minimum is 2. I don't really like to take trades that are a 1-for-1. Whatever works for you, whatever floats your boat. I'm just showcasing this to let you open your mind up to ideas and get curious, try things. I wonder if I do this. I wonder if I add right here and pull my risk down right here. Or I wonder if I wait to do this or that. You can get really creative with trading, and you can really construct your own kind of trading plan. And it's even very tactical on deciding how much you're going to add on each position, because that's going to move your average entry price. Some people might want, the better entry, but just use smaller size. And some people might not want the better entry, and they might just want for it to fall and show its back size and then just hit it harder than the person that's trying to find the top. There's just so many routes and different ideas that you can go with. I think it really depends on your personality and just kind of knowing yourself on what works for you. But I think you won't know what works for you until you have a decent amount of repetition. I think it's just like a sport. You're not going to know what you're good at until you try. What's your best quality? You got handles, you got a nice jumper, you can hit the 3, you a good free throw shooter, you take it to the lane, you could drive. Like, what's your game? What works best for you? What's the most efficient way for you to play? Trading really is a performance sport. It really is. It's kind of fun. It's kind of fun. I say that as the position is going in my favor. I say that. I'm risking 1.36% and I'm up 10%, right? So I'm risking 1.3% right now and I'm up 10%. You see how that can really help you in the long run? You're risking a lot less than what you may possibly make on this trade. But let's say, because it's unrealized gains, I'm not out of the position. This can very well still somehow come back, squeeze me out the position. It's the market, right? These are people moving the prices. If I were to close the position out right now, it would be a 10R trade because I'm risking 1.3%. I'm up 10%. But if I add to my position, it's going to increase my risk, right? And then I won't be up 10R because I increased my risk, if that makes sense. Because if I pull my average entry down too low, it widens my risk. And I know I kind of sound like a broken record, but I'm just speaking my thoughts right now. This recording is kind of long, so I'll definitely try and speed up around the parts that need to be sped up. Oh, a little bit of a pop. Okay, I'll take it. 1355 I didn't get the nice pop in the 1360s. Tragic. I got 1355. It's okay. If we get another pop above these highs, I'm adding again, though. It's kind of fun to be competitive with yourself and like try to really snipe those entries and adds and exits. Even when like the trade goes against you, it's nice to challenge yourself to see, can I lose the exact dollar amount that I want to lose on a trade? Like, that's a skill. Being able to lose the amount that you want to lose on any given trade, that's a skill. Don't take that for granted. I'd say that's the best skill to have in trading. We will see if we get some type of distribution breakdown right here. If we get a bounce, I'll add right here into the 1340s. Unless we just drop from the 1290s down, then. So I'm going to add to my short position right here. And when we get a nice bounce, like a decent bounce, again around maybe to 1340, I'm going to add more. I definitely want to get more in right here. Well, so 1286 ad right there. It's not a pretty ad at all, but that's just in case it keeps going lower because my average entry is so high. I can bring it down a little bit now. So price target is still around the $12 area, $10.50 area. Maybe it can go down to, oh, that was my sister. Do you want to come to LA for my birthday? I'm down. Let's see. Let's even get 1340s. Let's go. 1340s. We want it here. Let's see if it has enough juice. Still going to be patient on an ad. There's no need to rush anything. At this point, I'm just trying to be as efficient as possible. If I see that my risk is far enough away to where I can add more, I don't want to be undercapitalized in a trade either. And that's not because that's not focusing on the money, but you want to make sure you're not undercapitalized in a trade. You want to make sure you're not overcapitalized in a trade, right? I have an order ready to get short at 1340 area if we get there. If it breaks down, it breaks down. That's a good thing for my position. But if it gets up there, then I'll add a little bit more. We'll see what we get. Nice. I did get filled. I got filled 1340. Bigger size there. I was in a meeting, so I had to stop the recording for a second. But we're gonna see if we get a little afternoon squeeze here on VERU. But I'm not exiting my position yet because that is just not to my plan. It's not to my plan. I want to execute my plan day in, day out, because now, if I become emotional and I cover my position, one day the stock is going to fade back down. And then I'm going to be like, well, why did I cover my position? It's because I covered my position last time. And then I start creating bad habits rather than just sticking to my plan and what I do. And one reason why people won't stick to their plan is when they start paying attention to their P&L, how much are up, how much are down. Is it going to be a red trade? Is it going to be a green trade? I don't care. I just want the opportunity, and then I will execute whatever it gives me. Demand is really dying out right now. You can kind of see by the price action if I zoom in a little bit more. You can see demand is, there you go. Oh, there it is. Let's go. Let's go. cool. I covered on that pop. Really, in hindsight, maybe it flushes towards the end of the day, but in hindsight, after I see that it's not cracking this low right here and I see it put in a new higher low, that's something I'm going to need to take note about, and that's something to pay attention to because it already tested it once, broke, made a new low, tried to make a new low again, and it just couldn't. So at this point right now, when the stock is holding up, it becomes a competition of who can exit their position first. I'm already out, but short sellers will try to exit their position first because if you're one of the last short sellers to exit your position, you're going to get stuck in a squeeze. You know what I mean? And it's just going to mess up your risk. So even if this fades back down, I can't risk this squeezing even higher and then giving back all my profits for the day. You know what I mean? I don't want to be up this much and then break even on the trade. You know what I mean? So you can already see right now, it just came back for a sweep where all that liquidity is. So there's probably a lot of short sellers exiting their position in that moment. This one was being a little bit more stubborn, so that's just how it is sometimes. We can't control how a stock will react. But so that's gonna do it for today's video. Thank you for watching. I hope you enjoyed. I'll definitely have more content out, especially about data. And if you don't want to miss any future content, be sure to hit the subscribe button. And if you got any value out of today's video, and if you want to see more content like this, be sure to hit the like button, and we'll see you in the next video. Peace.